we've got Rohit Srivastava joining us this morning to help us make sense of what is the mood on Dalal Street and where does the story go from here. Rohit, first up, the bumper Q2 GDP that we saw coming in at 8.2%, sure to lift the sentiment on Dalal Street, isn't it?
Yes, definitely it does. It further stamps the idea that the measures taken by the government on the GST front and on taxes during the year are beginning to play out, and creates expectations that the slight improvement we saw in the second quarter of results over expectations will further improve as we go into Q3, which means the January numbers will show a further uptick going forward. So we're slowly seeing that curve from the bottom end of earnings growth to a higher trajectory, and the measures have really helped in, and the GDP data really shows that. So yes, it's something that definitely adds weight to the idea that the markets can, carry ahead into the next quarter.
Right. So what we understand from the fine print of the GDP report card that was published on Friday seems to be the fact that consumption has picked up, especially in rural areas. There's an uptick in manufacturing activity, and then there's also, of course, government spending, government capex that continues. Now, as far as the manufacturing activity in the uptick that we have seen in the month of, in fact, in the second quarter, do you think that's expected to continue even in the month of November, because PMI data is expected shortly?
Yes, I think, usually these things are not a 1 month rub-off because first you get a spike in demand, and then that carries forward into future production. So it will continue to show up in November, December data. Then by January, you will start questioning what happens to the next quarter, and then you will have the annual budget. So again, people will then get focused on, what the measures are going to be for the coming financial year.
That's right. But there also seems to be some buoyancy now with respect to perhaps, some people estimating, in fact, economists also saying that perhaps the Indian economy is overheated. Would you call it overheated at this point? Because you've seen H1 growth coming in now at an aggregate of about 8%. So keeping that theory of potentially the markets already being overheated, what do you expect the RBI's stance and decision on rates to be in the upcoming MPC?
No, I think overheated is a strong view to really have on 1 month of data. If you look at the entire year in perspective, both earnings and GDP growth went through a slide on the way down for months together. And that's the reason the markets saw a correction. And that's also the reason why the market is significantly fractured. When we actually look at a 6-month or 12-month return data, you find that the number of stocks making new 52-week highs are probably 20-30% of the entire basket, and not the entire lot. There are a lot of stocks that are still languishing, and that is why you don't see the wild enthusiasm you would have seen at an all-time high in the market. So the slowdown is what has been priced in pockets of the market. It may not reflect on Nifty, but the fact that it has been reflected means that you're not overheated. So overheated is a strong view. Okay. I think this is just the beginning of the turn in the earnings cycle. So we are in the very, very early stage of that happening.
Okay. And what do you think RBI's rate decision should be? What do you expect the RBI MPC to do? Do you think there is time for cutting another quarter, of a percentage point, 25 basis points, given the fact that inflation has been really low?
No, that's true. 25 basis points, I think, is almost priced in that they are going to do it. We can argue this month or the next, but I think it's about time they do it now, given all the data we have on inflation and the prior slowdown. Their only contention the last time was that the front loading of 50 bips had not really trickled down. That's what they said in the last MPC meeting. So that is the main call they're going to be taking. If they feel that, yes, the transmission has happened, then there will be more rate cuts. That much is clear. But I don't think it should end with only 25 basis points rate cut, given that the US is also going to get started on more rate cuts in the months ahead. We are looking at a rate cut cycle, not just one rate cut, I think, in the months that follow. And that's one of the future triggers also for the markets and interest rate sensitive stocks.
All right. And coming back to Nifty50, right now the levels that we are looking at, about 26,000, give or take 300. What do you think the next sort of resistance for Nifty is likely to be before one can be assured that, yeah, the euphoria of the bulls is back on the streets?
So at a very narrow level, I mean, if we just take a trend line of the last 3-4 highs, getting past, I think, 26,320 odd would be a sign that, yeah, okay, we've gone past this level. But if you do the same thing for Bank Nifty, it has already happened. So it's sort of leading the way.
Okay.
In Nifty, once we do that, I think we will then start looking at 26,800 and the potential of crossing 27,000 next. I think once we start trading well above 26,320.
All right. I want to just shift focus now to a few stocks and a few sectors rather. I'm looking at the FMCG space right now, and ITC rightly reacting negatively with news coming in that the winter session of Parliament is going to introduce the bill where there is going to be cess added in addition to the sin tax, the sin GST on tobacco products. Investors of ITC, is it time for them to worry, or do you think this particular sector is pretty much agnostic of price hikes and demand hardly ever falls down?
Well, that's been true historically. We've seen so many tax hikes on the tobacco segment. There are some things that people will consume anyway because of addiction. So that's, I don't think that is also the largest part of their business because they've diversified into so many different areas. So they've sort of de-risked the entire portfolio. But having said that, when we think of FMCG in general and we think of consumption, I think within consumption, I would look at the non-FMCG space. FMCG stocks by themselves are growing much more slowly in terms of earnings relative to valuations, and therefore the return outlook might not be so great even if they do go up. There may be better pockets, to play the consumption theme, including things like auto stocks or consumer durables.
All right, so auto stocks, consumer durable seems to be an addition to FMCG as far as views from Rohit go this morning. Rohit, I want to just spend a minute also discussing the upcoming IPOs with you and what your advice to retail investors would be. Let's begin first with Meesho, and Meesho already commanding a grey market premium of about 40 rupees. Remember the price band of about 105 to 111 rupees. Right now, looking at the GMP expected to list at about 151. How bullish are you on this space? I don't want specific recommendation on this company from you, Rohit, but specifically the e-commerce space. We've seen the e-commerce space also get disrupted by the quick commerce space. So looking at Meesho right now, what is your view on the e-com space and your sort of word of advice or caution to retail investors looking at participating in this IPO?
So what has happened with most of the companies that have listed in this space is that they've actually seen a correction before finding a floor. The reason could be that valuations tend to be higher, many times 8 times to 10 times sales, and then market wants to really reset that before it goes ahead. So one thing is the trade, which means you apply for the IPO, you get a listing, you're able to get out on the listing and make some trading gains. So that's a strategy that a lot of people follow, which is fine. So you can continue to do that because this is not a market which is, we are not in a bear market where usually such gains get wiped out.
Right.
So you might still make trading gains, but when it comes to investing with a 2-year, 3-year time horizon, it's always better, I think, to let it get listed, let the market find its own level, and then consider investment from a long-term perspective.
All right, and Meesho continues to be one of those e-commerce companies which has not yet declared a profit. It in fact continues to take losses. I think a minor loss of about 35 crore rupees or so in the last financial year. But given the fact that investors, serious long-term investors, do look at profitability as a matrix, how significant do you think in this space of e-commerce is profitability going to be?
No, it is significant. See, everybody's betting on the idea that if you have a big market share in terms of revenue, then you'll eventually show profitability, something that Zomato had to go through. They got listed at a high valuation, then they didn't have profitability for some time, and now they started to show profits and the stock rebounded. So the initial listing is often happening on the market cap to sales metric, which means people are trying to price it between 10 times to 8 times the revenue that you're actually earning. But the question eventually is, are you going to show profits? Because if that doesn't show up, then you will actually see the stock getting hammered. So that is the serious risk in buying a stock simply based on revenue and market share.
All right, and a quick word on Wakefit. Wakefit has also announced that its IPO is going to open next week. December 8th will be open until December 10th. Now, we are talking about a company which is reporting profits, at least for the first half of this financial year. It has reported profit of about 35 crore rupees or so. So again, you're mentioning consumer, consumption stocks, not necessarily FMCG. You did mention auto. What about, semi-durables as mattresses, home furnishings? How bullish are you on that space?
That's a continuation trend. So yeah, if you get if you have a boom in real estate, for example, then you do see a boom follow up in most of the consumption that happens behind real estate, whether it's tiles, whether it's home furnishing and so on. So it's really a call on what is happening at that level in the economy. But again, being an IPO, the attitude to the IPOs have to be the same, whether irrespective of the sector, that you're either playing the trading bet on the IPO or you're going to go for it long term. And longer term, you want the market to price it, settle it before you really jump onto it, because you don't know where they are in the earning cycle. Because a lot of earnings do happen close to IPOs sometimes, and it can lead to peak earnings being reported. That's again a risk. So there are various types of risks. I always prefer to let companies get listed before we take a long term view.